Welcome back. It's been a couple weeks now.
So sorry. Blame me.
No, blame me as well. I was in infrared for the 8 people who saw the little update last time. Opaque pupils. I was in a car at midnight, not driving while I was recording, but there was a dash cam. It doesn't matter. Here we are. We're back. It's not Sunday, but
It is good. It is good that we didn't actually do that, though, because you said the dash cam was, in fact, cutting the video.
Turning off and on throughout the whole thing, yes.
So
Glad
it would not have been a
7
good
minutes.
time. That would have been a lost
No.
podcast. We'd be re-recording it right now anyway. So,
Yeah,
good.
I always look for new and innovative ways to lose entire podcast episodes. I thought I'd try it again, but you put a stop to it.
wait, did you actually make an intro?
No, I did not.
Oh, okay.
Today we're doing FTX.
We
It's
are.
gotten too big to ignore. So,
We gotta stick with the trends, man. We gotta...
no.
You don't want to stick with the trends? Oh, man.
No, other people are doing that. And if we do it, what's our niche gonna be?
I suppose that's true. But hey, you know what? In the beginning, we can always stick to the trends, bring people in, and then we can explore our niche, and then we'll have people who are like, oh yeah, these guys, I know them. Let me check out what their niche is, and then they'll stick around with us. But in any case, I do think the FTX thing is very interesting because I feel like I share the perspective of a lot of other people who I've heard speak on it, which is that, like, when I first heard about it, it kind of came out of nowhere and was like this behemoth that I was like, wait, what? What is this FTX? It's apparently like the third largest.
Yeah, that's strange. I also
volume?
hadn't heard of it, and apparently it's just the biggest one of them.
Yeah, when I heard of it, I was just out of nowhere, and then they were labeling sports stadiums and esports teams, and I was like,
Baseball.
where?
Yeah.
And the founder is apparently like the richest person in the world under 30 years old.
Yeah.
And I was like, usually
Not
I feel like
anymore.
there's a little bit of a lead into this. And so something about how it just came out of nowhere into appearing like such a behemoth. I guess there was a part of me that was like, something's a little weird and off here.
Yeah.
And
The story exploded all at once, and well, I suppose they imploded all at once as well.
yeah, it fell as
but-
quickly as it rose, I suppose.
And he's not the guy that's being Sam
SBF.
Bankman Fried. I heard someone else say this. I'm gonna say it too though, because I agree. It's annoying because there's so many acronyms here. They
Yeah.
put an acronym of it. SBF, the founder of FTX with the FTT coin, was because of CZ's tweet on BNC at the time, which was, you got to remember all of them, or it just sounds like someone is hiding something from you.
I think it would be much easier to just say Sam Bankman Fried personally, and I'll probably just
Really?
say, I don't know. It feels weird referring to someone as like SBF, SBF, SBF. Maybe it's because I'm being contrarian that everybody is saying SBF. So it's only saving one syllable. Also,
I know. I just counted it out right there. And I'm thinking, wait a minute.
Yeah.
It's actually...
So
Wow.
like,
You've changed my
It's-
mind. I'm
yeah,
going to say
it's
Sam
not
Bankman Fried.
that big of a shortcut. But anyway, Sam Bankman Fried, that's usually how I'll probably refer to him. But yeah, meteoric rise out of nowhere, and then very fast implosion over the last month. And I mean, so I guess the story kind of has two different, well, it's actually like 70 plus different entities and shell corporations and stuff, but two main ones, which are Alameda Research, which is the crypto hedge fund, which I don't even know still if there has been much transparency into what exactly it is that they did or traded, because I haven't seen that as much of a focus in many of the articles as far as what their approach was, other than potentially front running new listings on FTX. And then, of course, you have FTX, which is the exchange that was made a couple of years after Alameda Research was founded, initially as means to facilitate their trades and give them an easier time. But that then as a platform ended up rocketing even into a much bigger market cap at the time up until its collapse than Alameda Research.
Alameda, I believe, because Alameda and Sam Bankman Fried started out with arbitrage. Sam Bankman Fried actually started his initial wealth billionaire
That's right.
boy
I do
club.
remember that. I do remember that. Yes.
Yeah. He found that since this was back in 2017, crypto in general was harder to buy in Japan, Korea, those markets. And so they cost a slight bit more. And so what he would do is he would buy it in the US and then he would sell it for a bit more in those markets. And apparently he did this enough and amassed enough wealth to fund some very large. Funny thing about this is I'm saying it in this tone because I remember when I used to go to my dad's where he worked when I was at the end of high school. And I said to him one day, this was during crypto's first big boom, like, wow, look at this stuff. And I thought, oh, well, maybe I should look into it. And I said to him, hey, it seems as if it costs a little more in Korea and Japan.
You actually said
yes, I did say this to my father, and he can verify. And I said it could be a little bit of an opportunity. And he goes, yeah, you should do that. And I said, yeah, I should do that. And then I didn't do that. And I was like, well, because I started
FTX.
I could have lost $20 billion.
Oh man, Bill Long's got some competition.
I thought of him when I saw this guy, of Sam Bankman Fried. So
I remember he was doing this while he was working at Jane Street, which is a trading firm.
Yeah.
That's also where a lot of his friends that ended up going into FTX also came from Jane Street, and they kind of worked together. And so, yeah, he started with arbitrage. But the thing about arbitrage is that it only works for so long, usually, because eventually other people catch on and then arbitrage no longer works. The reason why most of the crypto exchanges out there have pretty similar pricing is because arbitrage exists. That as soon as one of the exchanges has a lower price, immediately someone is going to buy there, drive up the price, and then they're going to try to sell at another exchange, and it all equals out. And when it becomes as big of a market as it has become since 2017 or whenever it is that he actually started that at Jane Street, I doubt that it's as lucrative of an opportunity. So I am curious, say in the last year or two, because obviously their strategies stopped working. I'm curious what it is they were trying at that point. You are muted now. I can't hear you.
Bada bing.
There you go. Now I can't hear you. What?
Can you hear me now?
I can, yeah.
Okay.
I don't even know. Is that a TV?
That was a space heater that I turned on right before I stopped being able to be heard. So maybe it was enough. It's an electric space heater. That's why I picked it up, and it wasn't connected to anything. Maybe that was enough to really mess up some stuff with the cord or the computer. Because I know I turned on a box fan earlier this year, and my monitors both turned off. And
But your circuit breaker didn't trip. It just
it's just something with the fields. I don't know. I am not an electrical engineer. But
You're haunted, man. What?
oh yeah, no, he stays in the kitchen.
Okay.
Every time I come home and it's dark, I turn on the light, there's always a shadow standing there. And I think maybe that's my shadow, but it doesn't move when I do. So I think, oh, well, it's
cool.
human shaped. Yeah.
That's nice.
Yeah.
Good.
Anyway, you know what else is a ghost?
The money.
Yes.
Yeah. Unfortunately. So anyway, I was, before we lost our audio there for a second, just saying
the arbitrage and how that doesn't work anymore.
Yeah, I doubt that that's effective. And
No,
it
because
must not have
anyone
been
can
as
do it now.
effective because he obviously would still have been doing it and probably not have lost boatloads of money if it was still a viable strategy. So I am kind of curious what they pivoted to attempting, at least over like the last couple of years.
Yeah, because the reason they can't do it anymore is because now anyone can. Obviously, once it's established as an opportunity, someone will automate it. And so if you want to, right now, it's called I heard it from someone, it's called a flash loan. If you find an arbitrage opportunity, you can get a loan of like $70 million.
For over the course of like a split second.
For 13 seconds or something.
13 seconds, okay.
You can be a 75 millionaire. As long as you have an executable code that says this 75 million is going to come back worth more 100% of the time. And so it's interesting. So that's, people just use that.
I feel like that could be a totally different topic in and of itself.
But if you see a half a cent worth of price difference somewhere, you can probably, someone else is probably taking advantage of it. And so now,
if it's half a cent over maybe every dollar or something, that would be gigantic for, $75 million worth of input. If it's a half a cent profit off of your $75 million trade, maybe not as worthwhile.
You can probably find a better opportunity. Go walk outside and find a quarter or something. You can probably get a better return. But now, so Alameda can't do that anymore. Just as you said, I also couldn't find their direct strategy currently, but they were offering a 15% annualized fixed rate loan. And
this is for the people who are giving them money.
Yes.
Which
and
is,
if you have more than 50 million invested, they said they're open to discussing higher than 15%.
Which is very weird because that is not how hedge funds work. Hedge funds usually operate on 2 and 20. So 2% per year and then 20% of the profit. And they do not give guaranteed rates of return. So
Alameda was a little different from the hedge fund in a couple ways. They operate a little strangely, little funny.
There is a clip that I have seen played out all over the place on all the coverage that has been done on this of the CEO of Alameda, who was not Sam. It was Caroline, his girlfriend
that he put as the CEO of Alameda because that was the other weird thing about this entire thing. It was this strange, close-knit group of friends that weren't as competent in the stuff as some of the other people who worked under them, but they were very close together. They made all the decisions just almost by themselves. But we'll get to that. I'm sorry, please.
Well, so the clip is just her saying like laughing in some math. Kind of we don't really use advanced math. It's a little bit elementary school math here and there. Don't really use stop losses.
Yeah, stop losses are not great tools, honestly. Don't use them.
Professional traders rarely use stop losses. Me, in my house, with a few bucks on something, okay, maybe I don't use a stop loss, okay? But, if you're dealing with hundreds of millions of dollars in a trade, sometimes that is a tool that is utilized and exists for a reason. And then the clip ends with her saying, I'm trying to think of a trade where I lost a lot of money, and then everyone is kind of like, maybe just time to stop.
Although I can, not completely, but I can partially see why she would say something like that about the stop losses, because in traditional investing, stocks, you're going to want to use a stop loss. If something's going down quick, don't hold on for too long, unless it's a long-term thing, but crypto goes like this. And so if you go down 10%, it is not super abnormal for it to go back up 50% because it's that volatile. And so that's probably what she was thinking when she said that. But when you get up to a few $100 million, as you said, you usually put in something a little less volatile, maybe something that won't get
I'm personally
bankrupted.
a fan of 100x leveraged futures. That's, my go-to.
That's nice.
1% down, you lose everything. Let's go.
That's good. I actually found 1,000
Really?
times leverage recently. Yeah. I've been using that. I felt like I wasn't challenging myself enough. So I'm using 1,000 to, how do you say, bankrupt myself just to the point where I can pay rent. And then, you got to stay on that grind.
Right. You take every dollar that's over your rent amount and you put it towards 1,000x leverage.
Yes. And then I will either be on that grind or ground.
You're not going to lose your rent. So, one way or the other, you're fine. There's only upside to this. There's only upside. If only anyone else could realize this.
That is the marginal advice of the day. Use 1,000x leverage.
And there is only upside. There you go.
There is only upside to leverage. Especially if you make up your own currency and use that as the leverage.
That is big brain. So I guess we should talk a little bit about the FTT. Is it redundant to say FTT token? Is token part of FTT? Is that like saying VIN number or ATM machine?
Wow, I never thought about those two. Yeah, I do believe the T stands for token.
Okay, so FT token is
token.
their cryptocurrency, FTX's cryptocurrency, and it was used as... I get the appeal for doing something like this, right? Because you can essentially allow it to act like a stock, but you do not have to issue more stock and dilute your shareholders. And
you don't have the same...
Yeah, you don't have the same obligations
regulations and restrictions as a publicly traded firm.
So for them, it was kind of supposed to be this analog to their stock in that they had this buyback program that if FTX profited, then they would buy back some of their FTT. And then, of course, because they're buying it back, it should go up in price, just like you would have with stock buybacks for any company out there that's publicly traded. So in having this program, people who believed in the company could buy the FTT, and then they get to participate in upside for FTX as a company, or so they would hope. So this was, freely traded on their platform. I assume it was listed on other platforms. But Binance earlier on in FTX raising money, venture capital funds, Binance had invested, and they ended up holding a lot of this FTT, which becomes very important for why the whole meltdown ended up happening. But boy, oh boy, did FTX raise a lot of money, and it looks really bad on the VC firms.
Yeah. And apparently when he was in the meetings, Sam Bankman Fried, pitching investors, he really was just kind of, maybe he was just used to saying it, or maybe he really was just making it up, but he's like, yeah, we're going to do this and revolutionize the world. And someone walked over him, and he was playing League of Legends.
Was this not, maybe it was multiple that he was on League of Legends. I thought this was Sequoia that did a $420 million round from 69 investors. This is real.
Oh.
This happened.
Happened. Oh my. Okay.
Yeah.
Oh, is that Elon's company?
No, that's FTX.
Said his name.
That's just FTX. Yeah, they were like, wow. The partners were like, I really love this guy because he's playing League of Legends, and isn't this great? We're really impressed. I do have a feeling now that the FTX investment is marked down to 0 on their portfolio. They might not take too kindly to any future video game playing possible founders who are looking to raise.
Man, way to decimate a niche, SBF.
God dang it. I was really looking to play Minecraft while doing a raise for my next venture. This is and now it's shattered. All thanks to him.
That's how he got me to do this podcast, by the way. He said, hey, you want to do a podcast? And I noticed he was going during the...
I mean, I do this all the time. I might as well be playing a video game.
You guys don't know it. He's playing right now.
I am. Yes, I'm playing Minecraft simultaneously. I'm actually just looking because I have the main screen where we load up clips and stuff in front of me, but then Alex is over on the left over there. So when I stare straight ahead, I don't actually see Alex, little known fact. So anyway, that doesn't seem like a very proud moment. I think Sequoia has taken down a good deal of their anyway, Sequoia was probably one of the participants in the $420 million raise from 69. God.
Yeah.
People. VCs in the past traditionally would say get some board seats at companies that they're investing in, have a little bit of control and oversight. And it's not just FTX for which this has happened to. It's kind of like the startup mania that has taken place over the last few years, and I think is now kind of trending back to normalcy.
Because of the interest rates.
Yep.
Back to the other episode.
But it's... I think there was there was so much FOMO even among the professionals, the VCs who are supposed to be, measured, going and doing tons of due diligence. These are risky early stage companies that go bust all the time. But it was like, no, I got to get in. So no, I guess we don't need a board seat. This is gonna be a big 100x valuation multiplier, and we got to get in, and it'll be fine. It'll be fine. Stonks only go up, right?
It was not fine.
And I think we might see a little pivot in that approach. So anyway, a lot of people got on board with their fundraising. I don't recall the exact amount that they had raised, but they raised it. What was it? It was over a $30 billion valuation in their final round.
Yeah, and Sam Bankman Fried held much of this company alongside a lot of the FTX tokens, which is where his largest most expensive billionaire under 30 valuation came from, is because he was not only the owner of this company, but he also had all of these tokens. The problem is with these tokens is that they were exchange tokens, which means aside from believing in the company, FTX, it wasn't actually doing anything new. The token itself, the token was used to make exchanging different tokens on FTX's platform. FTX was a futures trading platform. It was easier for them to have their own token. It made speeds faster, exchanging it, prices low. You got a discount from exchanging it. And so that was all there really was to it. And so when other exchanges had this token, they're really essentially buying something that if FTX goes away, so does that worth in its entirety.
It's centralized, whereas Bitcoin kind of exists on its own in the ether.
That's a much more succinct way of saying that. Yeah,
it is essentially cryptocurrency,
centralized, decentralized currency.
I don't know if you would necessarily consider something like FTT decentralized when it is attached to an exchange, whereas Bitcoin is not attached to any particular exchange. So I guess that would be the way to put it. So
Although you can buy and hold FTT in other places than just the exchange.
Other places do list it, but its value is essentially underpinned to FTX as a company, as an exchange. If FTX is to go bust, then it's likely that token is also going to go bust with it. And
apparently a little more than likely.
Yeah, well, we're talking in the past here. It obviously did play out that way, but beforehand, that would have been, if you were evaluating the risks associated with putting your money into this, then FTX going bust should have been one of the things you say, okay, well, how likely is this? Because if that were to happen, I'm likely to lose all of my money. And probably nobody expected it was going to happen that quickly, but it did end up playing out that way. So I guess where FTT ends up really coming into play here is that it was used as collateral in that Alameda Research owned a bunch of the FTT. And the part where we get into the potentially alleged criminal dealings here is where these companies were supposed to exist as completely independent, separate entities, and Alameda Research was not supposed to get preferential treatment, to say the least. It appears there was a little bit of crossover going on between the two entities in the way of potentially, allegedly, customer funds being loaned out to Alameda Research, the hedge fund, and the collateral provided in return was FTT. So essentially, magic internet money that was created and assigned value by FTX, by Sam Bankman Fried and co., was used as collateral for customer deposits on the exchange.
They were essentially their own little Fed there.
Yeah.
Because they were taking large, huge loans out against this money. But this money was their money. It was, and by their money, I mean they made up this money. And so,
if true,
all these
very illegal.
Allegedly.
Yes, that's why I say if true. Allegedly very illegal. There is, have you seen the clip of, I forget what podcast it was on, but it was like earlier in the year, and Sam Bankman Fried is talking with a couple other finance guys, and he's trying to like describe what gives a token value and how it's able to pay out a fixed APR. And he essentially describes this box where people keep putting money into the box. And because people keep putting more money into the box, therefore it can pay out while people keep putting money into the box. And the other people on the podcast are like, are you saying this out loud? Not describing a Ponzi scheme right now. And he's like, no. It's a box.
Because this is effective altruism. It's different.
And so, like, I remember when because I heard that around when it actually happened, so well before any of this fallout played out. And I remember hearing that and being like, okay, so this platform came out of nowhere, right? And somehow it's like this dude is the wealthiest guy in the world under age 30. And he's talking about tokens in this way. There's something off here. And I said to myself, I'm like, there's something off. Now, I didn't go and like, further dig into it and be like, okay, how do I short or something like that?
Yeah.
But still, I just remember that like, what? This is bizarre. Thought going through the back of my head to where when this now all has played out the way it has, I can't say that it came as like a shock. It was like, okay, I guess I'm not terribly surprised having...
Jordan has been on this since before anyone else.
Yes, I am a hipster. I'm the FTX hipster who never used the platform and didn't really know too much about it other than those little bits here and there that sounded like, this is weird.
You could have been working for Gary Gensler and did nothing with that information.
Suppose so. But anyway, so allegedly, giving the FTT as collateral for taking customer deposits from FTX and using them in order to trade on Alameda Research, which is not obviously not what the customers who deposited their funds in FTX agreed to or had any idea about or would have agreed to if it was known. And they had like campaigns, FTX did, on trying to get people, hey, deposit your paycheck onto the platform, use it as a bank. They got a slap on the wrist for actually making a claim that deposits on FTX were FDIC insured at one point, which is inaccurate.
Why would you say that? That's a concrete thing.
So I wonder if the reason for that would be because FTX had a banking partner.
Manfred.
Most of these cryptocurrency exchanges have a traditional banking partner where cash deposits are held in like this omnibus account. And then it's all lumped into one account, but the exchange keeps track of what values belong to each customer. And so I wonder if there was some kind of confusing thing where someone was trying to say, hey, no, but cash is held with our banking partner, and therefore it's like FDIC insured, but still that wouldn't make sense because it's going to be well over $250,000 in an account. So,
yeah.
But I do wonder if it was that sort of thing that they were trying to say, like, hey, we have a traditional banking partner, but they just, anyway, they said it badly and was not allowed.
Yeah, well, you know what? A real traditional banking partner, Goldman Sachs, Morgan and Stanley,
Morgan and Stanley.
Morgan, both of them. Yeah. And these really tried and true, unshakable organizations that we all trust with our money, Sam Bankman Fried invested actually $11.5 million in a state bank in Washington, whole state of Washington, their bank. It's really just a pillar of our entire economy.
The state bank?
That's the bank.
Wait, what?
That's the bank that he bought, that they have a bank. Yep. That's when they have a banking partner, they have a real bank on their side. That was it. It's a Farmington State Bank in Washington State. It's the 26th smallest bank in the U.S. It serves a town of 146 people and has 3 employees.
Huh? And it is that building with one window?
That's the bank, man.
Wow.
Fried.
That's the bank, man. Huh. That part of the story I definitely missed. That's fat. So did he buy that outright, or did he just invested?
Yep. He invested. Yeah. $11.5 million. And so
where is that derived?
And that's funny because over the past 10 years, the bank had deposits of about 10 million. So he pretty much doubled their
that bank has deposits of $10 million
over a decade.
Yeah, but like it's holding 10 million in customer assets?
I think it's probably the net worth of that entire town.
They all bank there? The whole town's bank? I want to know. Now we need a podcast episode just about this bank.
You guys don't have mom and pop banks at your house?
There are credit unions that exist. I don't think credit unions are still like a little bit,
Also, funny enough, after SBF, Sam BF, I like that better. After Sam BF.
Sam, my BFF.
Sam BF, that's what Caroline referred to him as.
Okay.
His Goyle friend. So after he invested that 11.4 million through Alameda, he did it. He invested the money. Funny enough, deposits jumped to $84 million.
Okay.
Through 4 accounts.
It's funny in a bank run, like the worry is usually, does the bank have the cash on hand? In this case, I'm not sure the cash would actually fit inside the bank.
They have to keep it in diamonds because they have to condense the money into the smallest possible space. Just you want 100 million? Okay, $10. Here is half
Here's
a
a few
milligram.
shavings.
Here, I just scratched this piece of platinum with my nail. Can you hold out your hand? Just let me just slide it across your palm. All right, there you go. There's your deposit.
You can go trade that on FTX's new metals trading platform, and get your money that way.
Oh, I'm sorry. I think I've misrepresented this. I can't believe I've shown you this.
What?
This picture. I really think I may have just pushed a misrepresentation of this entire thing. Here's a different angle.
Oh, okay. It has more windows.
It has another window.
Okay, good. Yeah, this is sort of a misleading angle. Okay.
Yeah.
It has a door with glass, and then it has a couple
It's
more
got one of them fancy
windows.
glass doors. Yeah.
Huh.
That's it.
That's
There's no
the
back.
bank, man. And the back is probably where the safe is or something like that. They don't have a vault. They have a safe.
Yeah, they have one safe. They bought it off of Craig's. They bought it from Home Depot.
How did they get what was the value of this place if it got an investment of $11 million, but he wasn't buying it out entirely? And how did they get 10? Anyway, this is a topic for a future podcast, is more about this bank.
I believe the value in this bank was that it was considered a bank and it can be a connection to Alameda.
Like we are backed
friend.
by FDIC and a bank. Man. Okay. Well, yeah, I didn't know too much about that. But speaking of investments, one of the interesting things is that FTX, I think it was FTX, not Sam personally. Anyway, invested back into Sequoia, which is the company that invested in the VC rounds in FTX, which kind of begs the question.
Okay.
Why do you need the money if you turn around and invest it back in the company that invested in you? Because is this like VC wash trading?
Invest in me to help invest in you, invest in us all.
Yeah, so it's like, hey, we'll invest in you at the $30 billion valuation. You then turn around and you invest in us at our increased valuation, and then we'll go back and invest in you at
communal
the higher
investing. Look,
just keeps going up.
It's just a good old fashioned two entities investing in each other with consent. It's really kind of wholesome.
So that was interesting. In any case, so I guess shall we talk about how the House of Cards all came crashing down, more or less, because it was very fast.
Yeah. I also just realized if we're going to talk about another story like this, because we've done it a couple times now, or at least twice, I got to buy a deck of cards and make a house, and then as a transition, go.
That's live. A lot of effort.
Absolutely.
Oh my God.
Anyway, yes, let's talk about that.
Yeah,
that's
so
a different podcasts.
It seems like it kind of the big starting point was CoinDesk, which is like a cryptocurrency reporting platform sort of thing. They basically came out.
Alameda and reporting at the time, not the best of friends, because if you suddenly disclose that all of your holdings and your worth is of money that you said has worth, people might not be so keen to keep their investments with you, especially not the. Sorry, you talk.
Well, so I was saying that
the
CoinDesk report said that most of Alameda / FTX's worth was wrapped up in this token that they created and assigned value to, essentially. And therefore, that would lead folks to believe that, oh, maybe this is not the most financially sound entity or entities being this entangled with each other when they weren't supposed to be. And the fact that if there is a bank run on this particular token, then all of a sudden all of their collateral becomes worthless, and therefore they've essentially lost customer deposits, and it's not. So after this report came out, would you like to say what happened next?
Yes. And you also just gave me an idea. So, not this episode, of course, because I cannot do it currently. In a future episode, if we ever talk about something like this again, I think we should do something special. Live on the podcast, you and me are going to become multimillionaires.
I would love to. How do we do this? Do we make a token?
We will, yes. And we will go step by step. And it's not going to be, make a token and then scam a whole bunch of people.
No, all we have to do is make one that has 1 billion units and then sell one to each other for $1.
Yeah, I was going to kind of drag it out in a more fun segment.
Sorry.
No, yeah, but yeah,
we haven't done it yet,
that's
though, so.
How funny. Yeah, we can do it live because I think it would be fun to see that demonstrated because it's essentially it's a simpler version of what FTX did. So this would have been a great episode to do it, but I'm sure there will be another opportunity.
I'm sure it takes a little. I would not know off the top of my head without looking at a tutorial, so it would take a little bit more time, but
that's also why we're not doing it.
Yeah, a little. Well, one day. But if you have, so the only difference between us doing that and FTX doing that is FTX has more customers who are willing to provide liquidity to something like that. The only difference between you creating a token with 2 billion units, or say 3 billion units, and then selling one to another person for $1 and saying, I'm worth more than, or I should say 3 trillion units, and then you sell one for $1 and you say, I'm worth more than Apple.
Think big.
I have a higher market cap than Apple. The difference is you have no liquidity, and you're not going to find 1 trillion other people to buy the thing for $1 off of you. So,
yeah.
And so therein lies the core problem.
That's why supposedly Sam BF had so many. He seems like he was constantly interviewing in every podcast or news station that would take him. He was pushing this idea that he was doing this whole FTX thing, this making $28 billion for the betterment of all, that he wanted to give it all away. He called it effective altruism. And hearing his original thoughts, I thought, wow, that's kind of, I've thought of something like that. That's really nice that he's doing that. Well, apparently it may not have been as genuine as he may have claimed.
No way.
Because in an in a conversation leaked from, I believe it was I'm forgetting the name of I don't know if it was Vice or a different site, but it was a reporter. He was SBF Fried, essentially said, yeah, no, I just have to say, I got to say things. Yeah,
this was a leaked Twitter DM, I think.
And then did he not confirm it? It was real for some reason?
He's a lawyer's worst nightmare. He just will not just stay quiet.
Yeah, that was me.
It's like he was on an interview, a verbal interview like earlier today or yesterday. Well, I don't know by the time this goes up, but it was earlier in the week by the time this goes up, where he was just, he wasn't being quite as incriminating, but still any lawyer would be telling you, just stop, just shut up, don't say things. What are you doing?
Yeah.
But I guess, for anyone who is watching this, would be happy to see him continue running his mouth, because it makes it all the more likely that there will be consequences for what's going on here. But anyway, to go back to how it all collapsed after this CoinDesk report came out, then Changpeng Zhao, CZ, is the founder and CEO of Binance, who, going way back, how Binance invested earlier on and had a bunch of this FTT on hand. They had, for a while, I guess, sort of been nemesis, him and Sam Bankman Fried. And while there is certainly a rational reason to want to dissociate yourself from a company that clearly didn't have a healthy balance sheet, it sounds like maybe he saw an opportunity to send FTX into the ground by saying,
absolutely,
I am selling all of the FTT that Binance has on hand, at which point the token collapsed in value. There was a bank run, and because obviously FTX and Alameda Research had so much of the balance sheet wrapped up in this token,
they went with it. Yeah.
Kaboom.
And it was absolutely a perfectly executed, I guess, plan to run them into the ground, because Alameda said to CZ after he said that, hey, we will buy all of it off of you. And you know what? You don't even have to sell it on the open market, because, once you start selling the amount that he had, the price goes down because you're selling so much. Even without other people panic selling, the price will go down just because.
Well, I mean, you're going through all the limit buy orders that are in the order book.
It keeps going up the lower and lower and lower and lower. And so Alameda said, hey, forget about it. We will buy all of it from you at market value, $22 at the time. That's a fantastic deal. And CZ said,
nah, dog.
Nah. And so it began. The graph going like this, that is.
I mean, you can look at the graph of the token.
Yeah.
It's just vertical line.
I was
basically
this close to sending that, but I thought, I send too many graphs. I'm not going to do it this time.
We love graphs here.
We do.
Graphs are informative.
It is a depiction of data that has been recorded. It's great, unless it's misrepresented, in which case it's not. But
I feel like the interesting part of this whole thing is like they could have done a bunch of stuff, with their FTT that didn't involve like leveraging customer funds in loans. Like they could have gotten wrecked, greedy. But it was like a double whammy of not only doing idiot things with like using FTT to underpin loans or something like that with traditional industry finance partners, but they were doing it with the customer money.
Yeah.
Like there was just like all these factors going back and forth with each other.
And if you're doing this illegal activity, if you are,
allegedly,
you would think maybe you would do something that may not get it all lost. People saw that they were using these customer funds and they were doing risky bets, and that contributed to a lot of the selling as well. But Caroline
Ellison. Yeah.
Caroline Ellison.
Ellison.
Thank you. SB Fried's girlfriend that he placed there.
I thought you said Sam BF.
I'm making sure I'm balanced and all the letters getting their proper treatment. Yeah. But yeah, S Bankman F, his girlfriend that he instituted at the top of Alameda, as we've discussed, she didn't use as much math. She didn't like stop losses. And that was the trend. SB Fried, he and his group of friends, was this close-knit group of, they essentially made all the decisions, and SBF being the top dog in those decisions, but different employees and people under them mentioned that they would barely consult anyone else. They would all just laugh and lay around the office, just kind of giggling to each other and playing around and making split-second decisions. They made decisions over chats that were quickly deleted and weren't saved. They responded to requests for different investing and pay increases with emojis, I believe. Official requests. It was this whole thing that, and they all. Here's the part that we probably won't go into. I'll leave it to a different podcast who is gone into it. They were all living in this house in the Bahamas, because FTX, they based it out of the Bahamas to skirt some regulations, but they also all lived there. Have you heard about this, Jordan? The details of this house?
Oh, yeah. No, I don't know the specifics. I know they spent a lot of money on real estate in the Bahamas, but I don't know too much about the specific HQ house where they ran stuff out of.
Well, in this particular house, it was a polycule, apparently. They were all, allegedly, they were running more than just the operation. Yeah. It was wild.
It was a very sweaty house.
You know it smelled crazy in there.
Okay.
I won't go into that because another source went into it, and I'm not just going to copy them. And so you can look into it, but it was a very strange thing, that group.
With a lot of sultry wood nymphs.
Yeah, that... If you want a quote, Carolyn, spell her last name for me, please.
Ellison.
Supposedly, her Tumblr account was found, and she was posting some stuff on there.
Spicy stuff?
Perhaps giving a glimpse into the house.
Okay.
World optimization is supposedly her Tumblr. We're not going too further into this, but she says some interesting stuff that may give a glimpse into the house, such as, she says, when I first started my foray into poly, I thought of a radical break from trad paths, but the only acceptable style. She says the only acceptable style is like, this is her words, imperial Chinese. How do you,
harem?
Is it harem?
It's a harem.
Harem? Okay.
Yeah.
None of this non-hierarchical bullshit. Everyone should have a ranking of their partners. People should know where they fall, and there should be vicious power struggles for the higher ranks.
Okay, so
this is the Bahamas household. You know how, forget this. They can make some of this money back on a reality show of this household in the Bahamas.
They really
because another one of her posts said what she looks for in a man is, quirky things like controlling most major world governments. That is a quote.
My Tinder profile: long walks on the beach, adventurous. You must control most world governments.
Illuminati.
N-A-U-G-H-T. Why?
I'm going to splice that in just because that was great. Low risk aversion. It was another one that she said, which, hey, she agrees with.
Doesn't use stop losses.
Yeah.
That was a criteria. No. You can't use stop losses if you want to be in the hierarchy. Well, it's the stop loss users are at the bottom of the hierarchy.
How about you try and stop losing your place in the hierarchy? How about that? Anyway,
okay,
we're
straying.
Yeah,
so
we're straying too far away.
So
you mentioned
whole
the real
thing,
estate.
Oh, I did. Yeah, go into real estate. I was gonna go into how they got hacked after the whole thing went down.
The hacking. Oh yeah, that's right.
The hacking.
The hack.
Alleged hacking.
That sounds like you're in a haunted house when you said that.
Yeah, the hacking. Which one do you want to talk about first?
We'll go quickly into the real estate.
Okay.
So SB Fried's parents own a over $16 million vacation home in the Bahamas. Funny enough. And FTX, the company, purchased some further use of executives and employees, some luxury real estate worth $121 million.
Yeah,
including 7 condos.
For world betterment, the world's most generous billionaire.
This was the betterment of humanity. This was altruism effectively. And so and then of course some money is still missing because their books were terrible, maybe on accident, maybe on purpose. And SB Fried, he got loans, so he's probably still doing all right. SB Man Fried. That's the Half-Life knockoff that is featuring B Man. But yeah, there's some interesting real estate investments with that, where all of this money. And the donations that might have to be taken back, but we'll get to that. We're kind of reaching the end here. We
gotta zoom. There may be a follow-up at some point on things, but so the whole thing, as the whole bank run was taking place, all of a sudden it was like, oh no, the platform is actually hacked. But the hack, I believe, was actually made possible by the pushing out of an update of the FTX app, which
whoopsie, we put some hackers code in our app.
Yeah, we let some hackers get access to our entire repository, and they were able to update the code and send a new build out to Apple and Google to get shipped out and updated onto people's phones. Wow, I can't believe the hackers did that, allegedly. So anyway,
hackers are getting better.
There's a little bit of skepticism around whether or not it was a hack or some money was getting moved around of what remained of customer
once they
deposits.
figured out that it wasn't going to be so happy in the end.
Yeah, so that's still a mystery, I believe. No one actually knows where that has gone yet. But suffice it to say, that is, again,
$1 billion worth of client funds are still missing, I believe.
Yeah, it's not great. It's not great. So I mean, all this is going to have to be. All this is going to have to play out in the legal system, and obviously, there's going to be, through bankruptcy proceedings, an effort to try to recoup any value. I'm sure the Bahamas real estate is going to, be sold off, and they're going to do their best to recoup funds, and people might end up getting paid pennies on the dollar from what ends up being recouped.
They're actual investors and creditors who need the money, because now that the bankruptcy proceedings are proceeding, they have to find out which of this money was used for the betterment of the betterment of their fraudulent activities, and then they're taking that back and giving it to creditors. Also, fun fact, just a little tie-in to a previous episode. One of the investors into FTX was a company called Tiger Global.
Right.
Tiger Cub.
I did see that. Yep. It all goes back.
Episode 2.
Bill Wong.
We gotta connect at least 3 episodes each episode. This has to be a web here.
Another investor, or I don't know if he actually invested, but I saw some little snippet article that Tom Brady had put not only had he been in an advertisement, but he put a lot of money into FTX, which is
his almost his entire fortune.
I can't.
And now
I cannot.
I can't believe that either.
It's not.
That's not.
It couldn't have happened. There's no shot.
No.
But I'm sure he lost money. But
breaking news: Tom Brady is unretiring.
Oh, didn't he just get divorced too? So, oh my God, dude.
People speculated that they might have been getting divorced because of these troubles to save some of their money between the two of them, just as an economic decision. But then that's only a theory, because it turns out their divorce proceedings were starting kind of before this happened, although someone else claims maybe they got wind of it beforehand because they were such a big investor and stuff was going wrong. Because
There's
Congress
no way,
actually,
though. There's no... Someone like Tom Brady
so...
has to have finance people around him who are managing the bulk of the... There is no shot. He is like, here's $600 million. Go have, and no one else is like, bro, you shouldn't probably be doing this. Let's diversify a little bit. Like, come on, man. This isn't, you've had it under our management. We're diversified. You have a bunch of equities. You have real estate. You have bonds. No, I'm putting it, there's no way. It's gotta be like, the article has to be just some like
an exaggeration,
speculation. I hope so. I hope. There's no way.
I do too.
There's no way.
Man. And some of the donations that because they donated tens of millions of dollars to political campaigns for one.
There's an interesting update on this as of today that I had just heard.
Oh, as of today? What is it?
So obviously, you have tons of people who are going off being like, oh, they were super leaning to, he only donated to Democrats. He was the biggest donor to
SB Fried. Yeah, SB Fried donated to Democrats mostly, but then interesting.
No, you gotta let me finish this one. You gotta let me finish this
please.
one.
I'm sorry.
Okay.
Yeah. Excuse me.
So he was like the second biggest donor to Biden. However, he is now, there's obviously no way to verify this, but he is claiming now that
Sam
BFF, he is claiming now that he donated an equal amount to Republican politicians, but he did it through obfuscated methods, like dark money, which is a thing. You can go through third party organizations. They had their whole web of like 70 whatever shell companies and stuff, and then you can go even more layers.
I'm kind of inclined to believe him because that sounds like something you shouldn't say. And so
he said essentially, he was like, if I wanted to, because journalists are left-leaning, I wanted to be viewed favorably by the journalists who were going to be interviewing me and stuff, and it was likely that I would receive a lot more flack from them if I was seen to be donating a lot to Republican politicians. And so he claims he did it equally to both sides, but only the Democratic stuff was seen visually in his name. So
I was thinking he's donating to these things so he could have some influence here, because he didn't want regulation, because that's how he got all this money, because there weren't regulations. There might be now, but I figure if he donates to everyone, then whoever's in power, he'll get some influence, because
whether or not they know that he was the one behind it, I don't know. If it was, if there was communication directly from him to the politician, and then he went and did the dark money contribution to where it wasn't traceable to the public, I don't know how much communication there was from Sam Bankman Fried to politician. So anyway, but he claims it was equal donations, and but also like judging by the responses to the DMs that were leaked, where he's saying, all the stuff that I said, it was just so that I looked good, but it's all BS that I have to say anyway. Like, unless he's just after the fact going trying to look full villain mode or something like that, or I don't know. It seems like, it would align to be playing both sides, essentially.
Yes, but no, because this SEC actually wanted to investigate, or they at least thought about it, investigating FTX earlier in March. Probably about the time you noticed that little thing, right?
The box where money keeps getting added to it.
Yeah.
Thing. Yeah.
They were going to, and 8 congressmen went against that. They said, stop doing this. And 5 out of the 8 2 Democrats and 3 Republicans received donations from SBF and FTX. It's a little more than a majority. It's interesting. But also Gary Gensler, the SEC chair, he's known for being big on, we got to stop these fake crypto schemes and scams. And so when this all happened, everyone was saying, dude, you prosecuted Kim Kardashian, but you missed this big thing. And so he's been getting a bit of flack for this. That's why I mentioned him earlier as well.
Understandable.
But now, if it's found out, and correct me if I'm wrong on this, in the bankruptcy proceedings, if it is found that all of this effective altruism that they were preaching was part of the scheme to defraud customers, then all of their donations can be considered part of the scheme and can be taken back.
Yeah, I don't know how that works. I don't know how many layers deep you can actually fish to retrieve funds, because if the donations
especially when it goes through
been spent on something else, are you going to garnish wages from a congressperson? Or they're probably not.
Absolutely not.
So I don't know how far you can actually go. That's a question for an attorney.
Okay, yeah, but I thought that's interesting that even their charitable donations can be repossessed if it was found that they did those charitable donations to trick people into thinking that they were good, which seems, wow. But yeah, it's not done yet, the story.
Yeah, it'll certainly be ongoing. There might be a follow-up episode, but as it stands now, a lot of
going a bit long.
A lot of money has been lost, and bankruptcy proceedings will try to recover some. But and I'm sure there will also be some criminal proceedings that will occur in the future. Just a question of who and what charges, and it'll be interesting to watch unfold. And but that's I think all we can do for now is watch.
Wow. Yeah. All we can do. And who are we watching?
What do you mean?
Who's the tap guy?
Who's the what?
That thing I was going to splice in earlier, but I'm not going to do that now because you're going to say it.
What?
Sam, you made a fun little pun that I said.
Oh, Sam Bankman Fried.
Look at that. It's a name. I haven't heard that before. And I thought that was funny. I'm actually amazed that I haven't seen that online. That's what I'm saying.
It's gotta have been used by somebody. There's no shot I'm the first person.
But you thought of it all yourself. And so that counts. So we'll see where this all ends. And who knows what the fallout will be, because apparently this was a fallout from the whole Luna debacle, because Alameda was more involved in that than they let on, and that's what started the dominoes way back when.
Well, they were trying to bail out company after company after company.
Yeah.
He was going to be the JP Morgan of cryptocurrency. Yeah. I think the kiss of death really is that Jim Cramer said, he's the JP Morgan of cryptocurrency.
He said that?
Yeah, he did. And I think at that point it was all over. That's really what this can all be.
I didn't know. Well, we could have shortened this entire episode down to one sentence then. This could have been a lot shorter. Jim Cramer is the... How many forces of nature are there?
I don't know.
The gravity, strong force, weak force. Yeah. Electromagnetic force.
I just know of those.
Jim Cramer. He acts in broad ways that we cannot comprehend. But he is above all.
All right.
So, thank you for watching. Thank you for waiting. It's been 2 or 3 weeks or something. Glad we could SBF.
I don't know where you're going with this one, but it's been real. We'll try to be more consistent.
Yeah.
And see you later.
Yeah. I might just cut after I say SBF. I was trying to be like, I was glad we could be your SBFFs or glad we could SBF for you. Bye.